All right, y'all, it's week 3, how to invest. And today, super short on the investing side. I'm just gonna show you what I did with an additional $500 that I put into my investment account on Robinhood. Pretty much, I just bought another fractional share transaction. I put another $500. I just bought another $500 worth of Amazon. It was kind of low today, so that'll bring my average price a little bit down. And that was it. So what I really wanted to hit today was basically my strategy and how I view money. So most people, they make their money off of doing some type of work. They exchange their time and for some type of payment. I look at it as a different way. I look at money as however you make money, whether you're unemployed or you're working or you're blessed enough to work. Good for you. Money that's coming in. It doesn't matter what you do to make it, whether you're doing illegal shit or not, or you're doing it the right way. Money's money. And how I look at money is basically how can I turn whatever dollar that I bring in into more money. So let's just say this is a hypothetical situation. Let's just say every dollar that you earn can potentially make you 4 cents if you invest it, right? So for every dollar that I make, if that can make me 4 cents, now on my mind, I'm thinking, how many dollars do I need to make $1, right? So if I make it 4 cents, well, 4 times 25 equals 100, that's $1, right? 100 cents is $1. So for every $25 I can invest, I will receive $1. All right? So let's say your monthly total fixed expense, meaning stuff that does not change, like, rent, bills, minimum credit card payments. Those are my monthly fixed expenses. Let's say and this is a hypothetical situation. Let's just say it's $1,000, right? So if you need $25 to make $1 while investing, then how much would you need to make $1,000 to cover all of your expenses, right? Well, you just multiply that by 1,000. So 25 times 1,000 is 25,000. That means if you invested $25,000 into the market and the market is paying you in dividends 4% every month, again, this is a hypothetical. This is what the idea is around how to invest. Then that means you can cover your $1,000 expense off of a one lump sum of $25,000, or putting enough money to get you to get that $25,000. So if that will cover up your 1 month expense, then after 25 months, that $1,000 would have already paid off or earned you $25,000 in that time. So I'm gonna break it down again. If you invest $25,000 and it's giving you a 4% return or off of dividends every month, that means you're earning $1,000 every month. After 25 months, 2 years and a month, that $25,000 that you invested will now have paid you $25,000. Everything additional to that every month forward is free money pretty much. Now you're earning money off of doing nothing, right? Or you're already earning money off of doing nothing, but now it's just a different type of earning nothing, if that makes any sense. So that $25,000 that you put in right now will pay you $1,000. After 25 months, you basically got paid what you put in. And everything after that is just taking care of everything else. So that idea is what we call in perpetuity, getting paid forever. So if I put in, that's how I think about money. I don't think about it like, I need to work, I need to do this to get more money. No, I look at how much money do I need to put in that it pays me? How much dollars do I need to make sure that it equals the amount of total monthly expenses that I have? And then with that, now I'm living free. That's financial freedom, where you don't have to do shit, but you're collecting money. That's just how I view it. Now, in this economy that we're living in, you're either employed or unemployed. And that's just in any economy, but in today, it's really prevalent. So you're either making money for not doing shit, the government's giving you money, or you're still working, you're blessed enough to work, and you're making money, which might be less than what the government could be paying you, which is unfortunate, but that's just the way it is right now. So with that, there's three types of people that will do something with money. You have the investors, you have the spenders, and then you have the savers. So we'll start with the spenders. This is very good for the economy. There's a lot of people who don't want to save, who don't want to invest, they just want to spend because they don't know anything to do than with money. Like, oh, I see money, how can I change this into some type of entertainment or fun or something that's going to stimulate the internals, whether it be mentally, physically, sexually, whatever, you know? So some people will spend money, and there's nothing wrong with that. There's no judgment. You need to spend money if you want the economy to keep moving. So like every dollar that you put into the economy, that means someone else is going to be some business or some entity will be able to get paid. That entity will be able to pay their employers. The employers will then get money, and then the employees will then get money, and then now they can spend it on whatever they like to spend it on, and that money just keeps circulating. Then you got the savers. The savers, in a sense, kind of hurt the economy because now the money is not circulating, but it's good for the individual because now you have a reserve fund that could, cover any expenses that might be miscellaneous that could just pop up. Most people in America can't even afford a $400 miscellaneous expense. So let's say like your car breaks down, you're probably gonna have to go use credit rather than just paying it off. And that's the standard of living in America, unfortunately, for a lot of Americans. There's no more middle class today. Now, the third person is the investor. The investor will take that money, and instead of putting it into some business by spending it or saving it to their own, because they know saving money into a bank account is not going to get you shit, they're going to put that money to use, earning some type of interest by investing it into the stock market or into real estate. Now, if you invest into the stock market, the potential for you to earn some money off of dividends or just through growth of businesses is a lot higher than if you just put that money into a savings account and you're earning less than 1%. And again, inflation is real. Inflation is an average of 2% a year. So meaning every dollar that you save and you just let it sit there for a year, that dollar is now worth 98 cents or 2% less. And the next year it'll be worth 2% less and 2% less and 2% less, because that's just the way fiat currency works. Fiat currency being money, and this type of money, this type of greenback that we've created. In all civilizations, money eventually falls, and what the Fed does is basically try to keep the money going as long as they can by keeping keeping certain interest rates low. Right now, interest rates are super low, goddamn close to 0%. So that's how money's free. So people borrowing money is like it's a good idea to borrow money if you're a large corporation or whatever, especially if you're trying to grow. So think of it like this: if someone would let you borrow money at 0% interest, how long would you take to pay somebody back? The smart person will just say, hey, I'm gonna take as long as I can because I'm not getting charged for borrowing this money. So that's how I look at it as credit cards. I may take advantage of 0% interest credit cards. Bigger businesses, they're doing the same strategy, but using it for loans. And that's just the way the world works. Unfortunately, I think it's good because I'm a capitalist, but if you don't know the rules to the game, you can't really play it as well as you think you can. So I'm gonna cut it a little short right here. If this piques your interest, I appreciate it. Please share with somebody that might benefit from it. If you have more questions, hit me up. And yeah, let's go to what and how I invested the $500 into Amazon. All right, so we're back on Robinhood. This is the app on my phone. We're gonna go down to Amazon. I'm gonna go ahead and purchase at a fractional shares. I'm not gonna do it by the units. I'm instead gonna do it by the dollars because I can get all the money that I have in cash just out. So I'm gonna go ahead and buy in dollars. I have about $503.06 remaining. So I'm gonna just go ahead and put that total amount in so I can use all of my cash as efficiently and utilize to the best ability. Swipe up. There you go. Order received. Before, my average price was around like $2,780. You can see that it slightly went down to $2,733. And that's what happens when you just consistently buy, whether it's up or down. The average will go down compared to what the current price is at the time. You can see now I have $0 in the buying power. And in the last week, you can see I'm still in the red. And to some people, that might be really bad. In the month, I've been in the red. 3 months, I've been in the red. And that's what happens in the stock market. It goes up and down. Don't let your emotions make you make a decision too rash. Just be patient, y'all. It works on the long term, especially if you're a long-term investor. So I have a couple orders that have not gone through yet, but I placed a limit order for Apple at 315. Right now it's at 360, so I'm hoping that there's a drop sometime soon and that order will get completed. I have another order for IDV. It's at 25 right now, but I placed the order at $24.50 and $24 as well. Still waiting for that to go through as well. So if you see here, my investing, that most of my money is in cash. I mean, most of my money is in stocks, but I have about $850 in cash, and that's because the orders haven't gone through yet. All right. Appreciate y'all if y'all watch that much. Again, if you want to get a free stock from Robinhood, you can use my link. Why not get a free stock? Other than that, if you got any other questions or anything else, we'll be back next week to show the progress report. And don't even worry about it if it's like low or if it's in the green or red. Like, if you're really thinking long term, it doesn't even matter.